Hey, good morning, guys. It's Sean here again with the weekly market preview going into midweek of March. We finished the week with a quite bearish sort of stance going into the weekend. Sorry for all my crazy lines here, but we are basically hanging right at the blue line here, the 9-day moving average on the daily chart. We pulled back quite impulsively after the inflation release and also after the SPY dividends day. However, buyers were able to defend the 5165 level, and so far from the overnight session, we are seeing a small recovery so far for now. Uh, Still have a couple hours left until the market opens. We'll see where this reversal takes us. However, nothing's really confirmed yet. I can draw like a trend line like this here. So we could definitely reject at the 5200 point and make its way back down to the 5165 level, last week's low. And this level actually does have a lot of buying pressure there, even from previous data that we're using here, these 2 points. So I don't think it'll be easy for the Bears to just break this very impulsively unless there's some negative catalyst that comes out overnight. However, if we fail to hold this level, our next key level that we may pull back down to would be the 5140 level. And after that level, we're pretty much looking to pull all the way back down to the annual trend line support here, the screen line. It's actually time to extend this since we've been moving up. Yep. So those two levels I'll pay attention to, the 5160, then we got 5135 and down to the 5100 level. That is where we would ideally want to go long. For now, I would wait until we can either test either of the key levels, so either the trend line or the 5160 level, and we'll either go long or short depending on the type of confirmation that we get once we get to those levels. If we do somehow break out of this trend line here, I want to see acceptance. Acceptance meaning I want to see bullish posture breaking out instead of a quick hit and reject, which is going to be most likely liquidation move, right? I want to see us break, pull back, and sort of consolidate, establish a new set of support here. Then we can expect push all the way to 5250 once again. And once we do get there, we can talk about the next levels to watch out for and whatnot. Um, into SPY actually did in fact touch the trend line. ES did not last week. Almost, but did not. SPY did touch it. Reversed off of it. So far pre-market we are seeing a very small gap up, obviously from the overnight futures session. And we're slightly rejecting that 51160 level, which was a previous rejection point that Bulls were supposed to reclaim last week but failed to do so. So this would be the level to watch. If you break above with great buying pressure, expect to push all the way to the 515. If we continue to trade below it and we reject and we start to fill the gap below 511, expect to pull back down to the annual trend line again, the 509, 510 level. And from there, if we do have selling pressure and we break below the 509 level and the annual trend line, things could get a little ugly and drop all the way down to the 503, potentially below 500 again. Don't get excited if you're a bear. Don't all in your portfolio right away. Wait for confirmations. Right now, we're just opening up. This is pretty much relatively flat to me. It's not really a gap up. It's just a small pop right there. What bulls really want to see is this level hold. So we'll see how the market plays out. We do have Jay Powell speaking twice this week. Once on Wednesday discussing interest rates, which is going to be huge, and one more time on Friday. So choppiness most likely until that day. We shall see. But if you guys have any questions on the market outlook or SPY/ES, Comment below or tag me in our Stock Dads Discord.